In today's episode, I'm going to share with you my day trading performance from the month of November with the goal of creating a profile of the type of stocks that I made the most money on so I know exactly what to look for in the days and the weeks ahead. No matter how you finish the month of November, December is a new month, so it's time to clear the slate, but try to build momentum from the very beginning of the month. And the best way to do that is to start by focusing on the highest quality stocks. I want to help you create a positive feedback loop, and that means starting with A quality setups. That breeds high accuracy, which will improve your profit to loss ratio. That improves your consistency, which improves your self-confidence, which allows you to start taking bigger share size, increase the quantity of trades, and produce more profit. Getting on a positive feedback loop for many of you will be a departure from what you've been on, which could very well be a negative feedback loop. And let's talk about what a negative feedback loop looks like. Low quality accuracy, trading low quality setups, which means you've got low accuracy. You've got a poor profit to loss ratio where your average losers are bigger than your average winners. You do not have consistency. You therefore have poor self-confidence. And this often leads to trading from a point of desperation, which further decreases accuracy because you're continuing to grasp at straws on low quality setups. This is a downward spiral that can result in blowing up your account. So let's stop that negative feedback loop. And instead, where do we cut it off? We cut it off right here by focusing on A quality setups. But the fact is, what is A quality this month? It was maybe a little bit different than what was A quality during the month of February or during the month of July. So as I go over my metrics, I'm hoping that you're going to be able to take away some sort of hints and clues at the type of stocks that you should probably be focusing on for the month ahead. Certainly if you're also a momentum trader like myself. So let's go ahead and jump into, we'll look at the month of November first, high level. So I finished November with $339,000, just over, in gross profit, $339,102.84. And I'll be the first to tell you that my results are not typical. I've been trading for a really long time. So I don't want you to assume that you're going to watch this episode and you're going to make $339,000 in the month of December. That's not realistic. But what is possible is that you start slow, you practice in a simulator, and you prove that each day that you show up, you can gain experience and you can learn from your mistakes. Because if you could do all of that, then you'll be in a much better place 30 days from now than you are today. The reality is the best time to have started to learn how to day trade was 15, 20 years ago. And the next best time is now, because the more you can gain just incremental experience, the more it's going to benefit you in developing your own sense of what I call educated intuition. So in this episode, I'm going to share with you, of course, the metrics for the month of November. And I know some of you are saying, well, Russ, how much money did you even start with at the beginning of the month to make the $339,000? Would you have $3 million in your account? No, I didn't, but I'm going to walk you through my account balances as well. And so if we look just high level, you'll see that November was kind of an interesting month. I did have my single biggest losing trade of the entire year in November, which was very disappointing, but I only had 3 red days. Typically, I allocate 1 red day each week. 1 red day a week. I'm totally okay with that. I can tolerate that. So 3 red days in the month, well, not bad. Could have been 4. And if it had been 4, I would have been okay with that. So I saved myself 1 red day versus kind of my 1 red day per week average. And I did have a couple of really solid weeks at the beginning of the month. The end of the month slowed down a little bit, but part of that also is because we had Thanksgiving and then, Black Friday is a half day in the market. So, the holiday week sort of throws things off a little bit. Now, one of the reasons that I feel like it's so important for me to share these metrics with you is because I remember when I was learning how to trade, when I was getting started, one of the things that I really wanted was to find someone that I could learn from. And that was seemingly impossible. And so, I ended up looking at some of these books. Oh, where is it? Here it is. I've got The Intelligent Investor right here. This is a book by Benjamin Graham. It's been around for forever. I don't know what the copyright is on this book. And look, it's an interesting book on investing and things like that. This is this one's a 2006 edition, but I think it was first published in 1973. This is a book that really talks about kind of the Warren Buffett strategy of investing. This is a book that was written by Peter Lynch. He was the head of the Magellan Fund at Fidelity. He also had really incredible performance. But when I was getting started, as interesting as these books are, they're not really relatable for someone like myself at that time who had a tiny account. Looking for value investing for something that could go up, 20, 30% in a year. If you're starting with $1,000, 20, 30% is nothing. Yes, it's a great percentage return, but it's better percentage return when you've got $1 billion of capital you're investing. It's not much when you're only trading with $1,000. And so for me, just to give you guys a little bit of perspective, and I think you all know, my name is Ross Cameron. I'm a full-time trader. But when I got started, when I got first interested in the market, I had received some money from my father when he passed away. And my goal was to use that money to invest with it and to try to basically make enough money investing that I wouldn't have to work a 9-to-5 job. And so for me, one of the first things I thought about logically was investing in real estate. But I couldn't get approved for a mortgage, even though I had enough money for a down payment on a small apartment building, like maybe like a triplex, duplex, something like that. I didn't have W-2 employment, so I wasn't able to get approved for a mortgage. So I couldn't buy an apartment building. I thought if I could buy an apartment building, I'll have the tenants paying me rent, I'll do the property management, and that'll be kind of like a side hustle that'll get me going. Unfortunately, that didn't work out. And so when I looked at the market, I realized, look, the barrier to entry to get into the market is so much lower comparatively than real estate. I don't need to get a mortgage approval. I don't need to buy this big property and know all about how to invest in real estate. Really, anyone with their phone can invest in the market. And in a way, that's dangerous because you don't have to have a license to invest. You can just start trading, and you don't have to have any proof that you know what you're doing, which is why a lot of beginner traders lose money. But what I was looking for in those days was someone who was kind of like me, who is trading the way I planned to trade, with a relatively small account and with a goal of producing on an annual basis kind of ridiculous returns. With a $25,000 trading account, the idea is like, can I produce $200 a day, which is $50,000 a year? That's doubling your account every year. If you reset it back to 25 grand, every year going from 25 grand to $50,000 of profit, so from 25 grand to 75,000, that seems like a lot to ask. And yet I believed that people were doing it. I saw anecdotally kind of the signs that people were making money. But when I tried to find someone to learn from, what I always ran into was seeing people who would post huge P&Ls sporadically. Now, this is a problem because they would, occasionally post a P&L and it'd be like a big P&L. But I was always like, well, but what is their track record? What over the last 30 days? Like, what did they trade? I want to see every single day. Don't skip days. Don't just highlight the green days, but that's what most people do. Now, today it's a little bit different. There are a lot more people out there that are trying to be transparent, which is good. But even still today, it's not nearly to the extent that it should be. So one of the things that I really like doing is putting it all on the table for you guys so you can actually see this is my performance each day of the month, every single day, the whole thing, and show you my broker statements as well. So you know beyond a shadow of a doubt that these gains are real. So if you're a trader with a relatively small account, this is basically the strategy that most small account traders are focusing on. Momentum trading small cap stocks. So let's go ahead and jump in here and let's look at the month of November. So for the month of November, you can see that I finished in good shape with $339,000, but I started the month, first day of the month was a red day, as you can see right here. Lost $9,000 first day of the month, which I think was actually my worst first day of a month this entire year, but it is what it is. The following week, I ended up with $109,000 of profit, green on Monday, Tuesday, Wednesday, Thursday, Friday. The following week, another really solid week, green on Monday and Tuesday. And look at how slow the profit was on Tuesday. $2,500 green day. The next day, $100,000 of profit. And I think that that really exemplifies the momentum trading strategy, because when there's something moving, I have no problem sizing up and getting aggressive. The problem is there are some days where there's not a lot moving. So on a day like the previous day, there wasn't a lot moving. I did the best I could. I only locked up $2,500. And the next day, well, there wasn't a lot moving either. I was down $11,000. The next day, $4,000. But then the following week, 5 solid green days in a row. Yeah, this day was a little slower, but then the next day's made up for it. Same with this past week. Monday and Tuesday, a little slower, and then $38,000 on Wednesday. But I finished the month with another red day. So that's the calendar in sort of top level view. And I'll show you, by the way, so if you go over to the website, warriortrading.com, down in the footer or under the About tab, you can always look at my earnings statements. So at the end of each month, I post my broker statement. So the month of November is already posted down here. So that's my broker statement for the month of November. So I started the month with $557,000 in my account. All right, so I didn't start with nothing. It was already a pretty big account. But what I will say is if we go back to, we'll go back to September. In September, I took $300,000 out of my account, which dropped my balance down to $155,000. So I've now grown the account from $155,000 up to just under $900,000. September, October, November. That's it. So in 3 months, from $155,000 to $900,000, just shy of. I'm at $872,000 right now. And I'll say that I don't need the full $800,000 or $900,000 that I have in here. If we look at some of the trades, even from just the last few days, none of them were using that kind of buying power, not even close. So I tend to take money out every couple of months, and I'll just do it in one large amount. And I transfer it to another Roth IRA that I have, which is for long-term investing. I don't day trade in it. In fact, I don't even look at it. I haven't looked at it in a couple of months. I don't want to think about it. I don't want to look at it. I just put the money away. I've got a strategy for that. And it's not sexy. It's not exciting. It's low percentage return, but that's exactly what I want. Slow and steady growth long-term in that big account where I don't have to think about it. It's totally passive. So anyways, let's look now at kind of analytics for the month of November. And we'll put November in a little bit of context. So let's see. And it actually looks like I'm just shy of 14 million in all-time gross profit right here. Well, actually, that's not all-time. This is from 2016, but still pretty good. So if we look at this year, we'll just look first at, where is it? Year to date. So year to date right now, I'm sitting at 1.5 million. Which is good. And it goes to show how just the month of November contributed $339,000 to that. More than 20% of my profit from the entire year came from 1 month. So that's good. It was a high performing month. My biggest single trade winner was $22,000. My biggest single trade loss was $24,000. Interesting. Average winning trade, $1,600. Average losing trade, $1,100. Okay, so a positive profit to loss ratio, which is good, and 66% accuracy. So all of that is good. I mean, yeah, the biggest winner's not huge. The biggest loser's bigger than I'd like, but it all kind of totals out and it's tolerable. And it produced a pretty good month. The biggest winning stock was BTCT. This was a cryptocurrency stock, which was kind of interesting. This was the day that Bitcoin came up towards 100,000. So that gave me a really nice trade. KXIN, really nice trade on that. SPAI, really nice trade on that. ALBT, a couple nice trades on some of these other stocks. And we can look at these stocks and try to find a little bit of a common denominator. So why don't we do that first? Let's look at the common denominator among the type of stocks that I made the most money on. So I'll just do it up here actually. So UMAC, is UMAC on here? Yeah, UMAC is on here. So UMAC, well, what would we say was the catalyst with UMAC? Trump. I mean, if we're going to be honest, it was Trump. So we had one stock that was a Trump catalyst this month so far. Now, the next one down, KXIN. I want to say this is a pharmaceutical company, KXIN. Let's just double check it. No, I'm sorry. I'm not right on that. Oh, I'm sorry. This is a China stock. All right, so KXIN, China stock. So we'll do China. All right, so we've got one Chinese stock. All right, that's on the leader. Then we have SPAI. Let's look at SPAI. SPAI is located in Florida, U.S. company, Drone. All right, so the thing is, Drone falls under Trump because that was a Trump catalyst. So now let's look at ALBT. ALBT, this is a U.S. company, biotech. All right, so now we've got one biotech, and we're just kind of looking at some of the top performing sectors. So we've got one under the biotech tag. All right, that's good. And then we've got AGFY. AGFY, this one had a couple nice trades on it. Software, indoor marketplace. Yeah, kind of a funny one. Cannabis and hemp. I don't know. I'm gonna put that one under, for right now, other. And I'll just write the ticker, AGFY. All right, so we've got one under other. All right, so let's look at a couple more of these. JTAI. This one is Miami, Florida, U.S. company, operates. Oh, right. This one was so interesting. So this one gave us a really big move, and the news was that they had bought like 5 new airplanes, Jet AI. It didn't seem like a super significant catalyst, but it just gave us a big move. So I'm going to put that one under the other as well, JTAI, and both of them sort of fall under short squeeze category. They just ended up producing a pretty epic short squeeze. SONN. This one is biotech. So we got another one for biotech. AREB. Let's look at that one. AREB. So AREB is self-defense, safe storage, carried concealed products. That's going to go under Trump catalyst. UAVS. Okay, UAVS. This one is drone. That's Trump catalyst as well. That's 4. Then we've got Zena, Z-E-N-A. Okay, so let's see on this one. Software, yeah. Mission critical cloud. I'm pretty sure this one also falls under the Trump catalyst. Yeah, drone. So that's 5 under the Trump catalyst. So, you kind of see how this is sort of playing out. So then what were some others? FBRX. FBRX was interesting. This one had a private placement catalyst. So private placement, this is kind of interesting. This was a drug, the stock drug from October, and FBRX both fell under this catalyst. And this was a really strong one. So that's something to pay attention to in the coming days and weeks. BNZI. BNZI, this one we've traded a number of times. Let's see. Washington-based company. Yeah, it's kind of in the other category. And then JFBR, RSLS. Yeah, okay. So, and these winners were getting a little bit smaller. So I think we've looked at, the top 10 more or less. So when we look at the top 10, 50% of the top 10 biggest winners had a Trump catalyst. So I think that's something definitely to pay attention to. And you might think, well, the catalyst is over, he got elected, but the catalyst continued. It's just it continued with mentions, mentions of they're interested in this, or when Donald Trump Jr. joined as an advisor for one of these companies, that created a big catalyst. So it's sort of like there's a lot of tangent catalysts connected to Trump. So I think that's something to continue to pay attention to. All right, so that's a good starting point. Now, BTCS, the biggest single stock that I was the deepest red on of 9,000. Cryptocurrency stock was not easy to trade, sized up a little too heavy on it. TRNR, it's the stock that I had my biggest loser on, but then I ended up making back on trades later in the month. So it wasn't that bad. COCH, some of these other ones, maybe we'll find those filtered in a different area. So this is an interesting spot for me. Performance by instrument volume. And you can see that I did far and away the best on stocks that had over 10 million shares of volume by the end of the day. Now, this is tricky because at the moment that I trade some of these stocks, I might be one of the first people that sees the news because I'm up early, I'm trading pre-market, and so I might trade a stock that has 300,000 shares of volume because the news just came out, but by the end of the day, it's got 30 million shares. So I definitely had the right idea, but some of the stocks I trade with light volume, well, they didn't end up picking up and I ended up getting smoked on them. So like GRRR, CTRX, XPON, TRNR at the time had lighter volume. LEDS, RSLS, this is actually my total shares, not the volume traded, but nonetheless. So RSLS, a couple that were profitable, but in total, those stocks with lighter volume that finished the day with light volume cost me a few of my bigger losses. Here's another section here, the 500K. So ISPC, NA, right? So, I think that this is going to come back to my suspicion is that on some of these stocks in the month of November, I jumped on them quickly when they were spiking up, even if I wasn't sure if they had news, because I saw that they were moving. So and you guys probably all know this, but just to reiterate, the strategy that I have implemented, that I'm trading every single day, is to trade volatility. And typically, it's a company puts out breaking news and the stock starts squeezing up. But I don't read every single news headline that comes out every single day, all day long. That would be impossible. And it wouldn't be helpful because unless you can put the news in context, it's hard to know if you're the first one to read it, if it's even really good or bad for that company, unless you know the whole history of that company. So what I do instead is I use my scanners here, which is the day trade dash software that I've developed, to search the market in real time for stocks that are squeezing. So when a stock hits my scanner, like let's say Zcar right here hits my scanner, I'm immediately looking at it. I'm saying, do I know the ticker? If I don't know it, what's the price? What's the float? If it's moving fast with a lower float, I'm going to jump on it quickly. Now, my news feed right here loads fast, but there are times where it'll take us even just like 15, 20 seconds for the news to populate. And if I see something's moving and I don't want to wait, I'll jump right in. And so I had a number of trades in the month of November where you had a stock that was spiking, but there was no news, and I traded it anyways, and I lost. So, it costs you some money to be patient, but it actually, in total, saves you money. It costs you because you don't get in maybe quite as quick as you might, but in total, it would have saved me money if I'd been a little more patient. So, so we'll start kind of jotting down some takeaways from the month of November. So, November lessons. So number one is patience. So let's see. I'm going to say, needs. See, I don't want to say that either. Confirm catalyst. I'm just going to leave it at confirm catalyst, because if it's possible that there's stocks that I'll trade that don't have a catalyst if it's a continuation setup, in which case the catalyst is continuation. So that's okay. If a stock is popping but has no news and no clear catalyst, that's when I have to be careful. So patience is important, but confirming the catalyst. So far too, Trump catalyst sort of, plus, pay extra attention to those in the coming weeks. And I guess I would say number three, biotech and private placements. So just in terms of kind of, that seems like, and well, number four, low float under 5 million and under 2 is like plus, sort of extra if it's under 2 million. So, and I just know that for a fact based on how the performance was for the month of November. So anyway, so I use the scanners to search in real time. And when I see the stock popping up, I jump in. But I've got to make sure I confirm news before I get in. Because these ones, the reason more volume didn't come into them was because they didn't even have news catalyst. So there wasn't a reason for them to really go up all that much. So that was a little bit of a mistake that I made. Now, if we look at price and volume, and we got to take off this one filter I've got. Let's see. I'm just going to take this off here. So this month. Okay, so this is actually kind of interesting. Made quite a lot of money in the $2 to $5 price range last month, but did well between 5 and 10 and 10 and 20. 10 and 20 though, kind of an outlier. This is not typically what you would see. If I go to all time, you'll see that this looks a little different, where mostly I'm doing really well between 5 and 10, and 2 and 5 is a little lower, and 10 and 20 is a little lower. So this past month being higher in the 2 to 5 is interesting. And I would attribute that to the fact that the stocks between $2 and $5, I felt comfortable taking bigger positions on because they had relatively tighter spreads. So some of those $2 to $5 stocks, I felt comfortable buying 30,000 shares. I had a couple where I had 45,000 shares. And I didn't feel like I was really taking that much risk because the spreads were so tight. But gosh, if the thing went up 30 cents, I was up 12 grand. We got a couple moves like that, 25,000. So, I got a couple of nice trades there for sure. So in terms of distribution of trades, that was the price range that I traded the most. And again, that's not really out of choice. That was just what the market gave us, but I happened to do quite well on it. So that's interesting there. So instrument, we already looked at instrument. So let's look at, so TRNR, I already know that one. COCH, let's look at this one for a second. Traded it just on that first day. Yeah. Oh, yeah. Yep. Right. So this is one of those kind of big spikes that came all the way back down. Yikes. Right. So what day was this? This was on November 1st, I think it was. Yeah. So, again, you got a big spike. It didn't hold up. Should have cut the loss a little faster on it. And it was also one of the lower volume ones. So very possible it didn't have a strong catalyst. And I was chasing it rather than wait for the first pullback. So I got to wait for those pullbacks. Let's see, win-loss expectation. Let me reset this month. So yeah, I went red on the first day of the month, had another loss in the middle of the month. Or what was this? Somewhere, no, I don't know. So I had a loss there, had a loss on the last day of the month. Accuracy 66%. Had this drawdown here, this drawdown here. I'm in this drawdown right now, but it's not very deep. So that's not too bad. I don't know why they make it go above 0. That's kind of funny looking. Doesn't matter. Oh, days and times. Wednesdays, far and away, Wednesdays were the best. That's kind of, I feel like, just a coincidence. I don't think there's much to read into that. It just sort of happens to be the case. I did have a couple of power hour trades this month. I dabbled. I got to be careful with that because that's not usually when I do well. But I did make money this month during power hour. And the rest was between 6 a.m. and 10 a.m. And that was it. So 6 a.m. to 10 a.m. And these are only a few trades I took probably between 6:45 and 7, coming right up to the top of the hour because I sit down at 6:45 most days. So from 6:45 till 10 a.m. and then the trades between 10 and 11 were a net loss, but I didn't take very many trades during that window. So traded the most between 8 and 9 a.m. and 9 and 10 was a little bit lighter, and then 10 and 11 was lighter than that. So that's kind of the window right now where I'm trading the most aggressively and finding the most success pre-market up till about 10 a.m., which makes sense because that's when the companies are putting out news. They're putting out news pre-market. Once the bell rings, we're not getting fresh news headlines anymore. I mean, sometimes you do, but typically we don't. So if you're a volatility trader focusing on trading breaking news, pre-market has been really solid. At the open, we have had some days where sort of between 9:30 and 10, it's a little choppy. And then we can get a second kind of leg higher between 10 and 11 or 12. I tried to trade a few of those this month. I didn't have as much success. And one of the challenges that I was facing was that when they would start to pull away between 10 and 11, right away, they'd be running into halts. So I had a stock I was looking at just on Friday where it was like 9:45, 10 a.m., whatever. The stock squeezed up to 597. And I was like, oh, okay, I might buy this right here. The halt level was 637. And I was like, I'm only going to be up 37 cents. It's already going to be in a halt. I don't know. I don't know if it's really worth it. And I talked myself out of it. I said, nah, I don't think it's worth it. So the halts have been a little tricky because certainly some stocks, the cheaper ones, can halt every 15 cents, which is kind of ridiculous. The more expensive ones can be every 10%, and every 10% is kind of tight. I mean, when you think about it, that's also a relatively tight halt band. The better halt bands are when it's 20%, which means the stock has to have closed the prior day between 75 cents and $3 a share. So there's these sort of halt thresholds, which are governing this. So yeah, I think that the halts, I mean, look, in a hot market, and it was pretty hot in November, we will typically see good continuation at the open. But I actually saw, let's look at the month of October just to compare. So let's look at last month, see how last month compared. So last month was $407,000 in gross profit. I had a better profit to loss ratio of $1,500 winners, but only $800 average losers. Biggest loss was $14,000. Biggest winner was $33,000. So better profit loss ratio across the board. Wednesday is also the biggest day of the month. So let's note that down. Wednesdays, number 5. I mean, I feel like part of it's just coincidence, but Wednesday's best performance. Something to pay attention to. So, all right, well, Wednesdays are the best, but then, be careful on Fridays. Fridays have been a little tough. So Wednesday's the best, Friday's the worst. So just thoughtful about that. But this is interesting. So performance last month was pretty much the same, except that I took a lot of trades between 10 and 11, and I didn't produce profit in October. Actually, that was October. But yeah, so and the most trades were between 8 and 9 a.m. So again, this is trading breaking news. Now, if you're a volatility trader and you want to trade after hours, you can do that because we have companies that put out news after hours as well. So that's fine. There's nothing wrong with trading after hours. I just don't feel like it's my goal to sit here for that many hours per day. It's just, look, could I make more money if I sat here for that long? And yes, I could. But at a certain point, there's a question of how much more money do I need to make? And is the purpose here of trading to achieve a life of financial independence and freedom? Or is it just to sit in front of the keyboard for 12 hours a day? Because I could get up at 4 a.m. and trade until 8 p.m. I could trade for a 16-hour day if I wanted to. And some people might. But I don't think that that's a good quality of life. I don't think that's really healthy. So that's not my plan. That's not my goal. But it was just sort of to say that if you are wanting to trade my strategy, but at a different time of day, that is an option. You don't have to trade just during the hours that I'm trading. I'm just choosing to trade during kind of the morning news cycle. The 4 a.m. to 7 a.m. window is lighter volume. So although, we have had days where we've seen some nice moves at that time, it's just typically lighter volume, which means you wouldn't be able to take big share size. So the total profit that you could make is sort of limited to begin with. It's kind of like not super, super worth it for me there either. But, look, if I was in Europe and I had nothing I was doing at that time of the day, I would sit down and I would just watch. And maybe some days I'd catch a couple trades between 4 a.m. and then I'd probably be done by 10 a.m., which would be 4 p.m. East or 4 p.m. Depending on what part of Europe you are. But that's probably what I would do if I was in Europe. But if I was in, Hawaii, I might just trade from, power hour, 3 p.m. to 5 p.m. just for that 2-hour window. I mean, that might work better, so it kind of depends on what works for you. But, if we go back to the whiteboard here, so right now, market opens at 4 a.m. pre-market. 7 a.m. is when most retail traders brokers allow trading. And then you have 9:30, which is the open. And then we have 4 p.m., which is the close. And then 8 p.m., which is the end of after hours. So if you kind of thought about, if you looked at most stocks right now, they have the most the volume is peaking right here in the first sort of hour. And it's kind of lighter and increasing and then kind of decreasing. But you have some stocks that come out with news, so you get a bump right here for some stocks. And, you will get a bump right here for some stocks that have news early, but, sort of little bumps here. But in any case, generally in total volume, we're peaking right around the open, and then it sort of declines from there. So I think it's generally better to trade during high volume times, but when you have a company like Netflix or Apple that have earnings after hours, that gets a lot of volatility. Of course, I'm a small cap trader. So if we looked at Friday, well, Friday was kind of unusual because we had an early close. So after hours was different. But so that doesn't really count. But anyways, if you looked at most days, what you would see, even in just the overall market, is higher volume early. I don't know. So this is kind of interesting. That's, you know what? Those are batch orders because that was going, I think, into after hours. And I think that's, I think that's on the S&P 500, which is mutual funds and stuff like that. So this is what you're going to typically see, though, is this sort of high volume and then declining as the day goes on. So anyways, you could trade whenever you'd like, really. It's just, you want to pay attention to the news cycle. I think that's important. So, all right, now if we go back here, so Friday's the worst, Wednesday's the best, and between 7 a.m. and 11 a.m., that's kind of the window where I've been doing the best. All right, so that all makes sense. What else can we learn from November? So biotech stocks, low float stocks, stocks with higher relative volume, check. That all makes sense. We could look at, compare average winners to average losers. So to compare winning trades to losing trades. So last 30 days, whatever, it's fine. Last 30 days. Yep. So generate report. So average winner, 11 cents, average loser, 12 cents. I mean, honestly, that one big loss doesn't help, but it is what it is. So yeah, I was just looking at that share size. So if my average winner is 11 cents and my average profit is $1,600, that's a 10,000 share average position approximately. And average loss is 12 cents, but average loss is only, I'm sorry. I'm sorry. Share size is bigger. You know what? My average winner is usually closer to 15, 16 cents and 1,600, which is why I said that. So average share size was a little small. Average share gain was a little smaller. So total share size would have been higher to produce 1,600 shares, right? So closer to 15,000. 15,000 shares. Okay, that makes sense. And then on the losers, average share size is like 9,000 shares. Just about that, because I'm down 1,100, just under 10,000 shares. Okay, so taking bigger size on my winners, smaller size on my losers. Why is that? Well, on the winning trades, I scale in, I add, and on the losers, if it goes to a loss immediately, I don't add to it. I mean, it's a loss, so I never go to full size. So that's helpful. If I had the same share size, then the losses would actually be bigger, because the share size, the dollars per share loss is slightly bigger, 12 cents versus 11, 1 cent bigger, but the dollar amount is smaller because the share size is smaller. So that's interesting. I don't think there's anything else really to read into in a big way there. So, okay, well, So then back here to this section of the whiteboard. So just kind of note, average winner, only 10 cents, approximately, right? So 10-cent average winners, but you have enough of them with big enough size and you can do really well. And of course, I had a few trades that I did really well on, which extended my average winners. But for me, the strategy kind of always is I get in, I scale up, I try to make as much as I can, and then I get out. So I get in, I scale out, I get in, I scale out. So I'm very actively trading stocks that are moving higher. I'm not like one entry and one exit. I'm trading it very actively. So as we come to, well, the end of November, November is now in the books and we've got a new month ahead. We are all starting at the same place. We have an opportunity to start the month with a clean slate, and I really want you to focus on highest quality stocks. The quality of the stock is first and foremost. If you see an awesome pattern, but it's on a stock that nobody is watching, it's probably not going to work. So yes, having a perfect pattern is always great, but even more important is making sure that you're trading the right type of stock. So the type of stocks that I've been performing the best on, so number one, and I'll just kind of highlight here, stock selection. So stock selection, so price window was 2 to 5. That was, and this is like the best. Doesn't mean I won't trade outside it, because I will, but this was the best. Percentage change, we know all of them were up at least 10% on the day. Relative volume, we know it was 5x, which is good. News, yes. Float, under 5 and lower for float. 5 million shares. So this is kind of like the zoomed in profile of what was really working the best, especially when that news catalyst was a Trump related catalyst or biotech or private placement. This was really the sweet spot. Now, it's not to say I didn't have some good trades all the way up to, $15, $20 a share, because I did. And certainly if I see a stock on Monday morning that's $15, I won't hesitate to trade it. But this is kind of the wheelhouse where I've done the very, very best. So I just have to be thoughtful of that. Remind myself that Wednesdays were the best. Friday was the worst. So sad face on Fridays. And that the average winners were only 10 cents a share. So as long as I can get in, get green, book that profit, that is how I can build my cushion each day. Now, for those of you guys who didn't know, Friday was Black Friday. What is Black Friday? Black Friday here in the United States is where we usually have the biggest sales of the year. So a lot of people go to, Walmart, buy TVs, all that type of stuff. At Warrior Trading, we also offer our biggest sale of the year during Black Friday. And the Black Friday sales are still going on, but they will be ending soon. So we have Black Friday and Cyber Monday. Cyber Monday, traditionally Black Friday was brick and mortar stores, and then Cyber Monday became internet businesses. But most internet businesses just run the sale from Black Friday through Cyber Monday. So we'll continue the sale through Monday, Cyber Monday. And if you haven't already checked them out, I encourage you to come check them out. The Warrior Starter membership at Warrior Trading is our introductory membership. That'll give you access to my 15-chapter day trading course called Day Trading the Basics. It's going to set a really solid foundation of all the key concepts that you need to understand to start trading. Included in this Warrior Starter membership bundle that we've got for Black Friday and Cyber Monday is a month of access to my chat room, a month of access to my audio video broadcast, a month of access to Day Trade Dash, which is the software I'm using every single day right here for scanning, charting, and news, and a month of access to a simulator with real-time level 2 data. So that's all of that for $597. Now, some of you guys have already checked out the starter and you want to go pro, and you've maybe done one of our pro preview trials. The Warrior Pro membership includes Day Trading the Basics, and it also includes my 20-chapter course called Day Trading Strategies and Scaling. Strategies and Scaling is, it's my full-length curriculum. It goes into a lot of detail of the actual strategies that I'm trading every single day. So if I pull this up here, I've got this up on this other slide deck. So this is the Strategies and Scaling course in the PDF version. So it's about 1,800 slides long right now. And this goes through a tremendous amount of depth, showing you the exact entries and exits. So remember when I was talking earlier about how when I was getting started, I really wanted to find someone who was showing me a track record. So first of all, that was nearly impossible to find someone who's putting out a track record every single day of these are the stocks I'm trading, this is how much I'm up, this is how much I'm down. And then second was finding someone who was actually willing to teach that. Now, although there have been people out there who have been sort of teaching, the criticism that I kept hearing people say was that this person's DVD was like, an hour, 2 hours long, whatever, basically just bragging. I didn't get anything out of it in terms of how do I actually find these stocks in real time and where do I buy and where do I sell? And so my goal with this curriculum was to bridge that gap so that when you finish this class, you know exactly how to find stocks in real time on your own. You don't need me to do it. You know exactly where to get in and where to get out. You don't need me. You don't need to follow me. I don't want you to follow me. My live stream is an interactive classroom where you can watch me put the strategies that I teach on display. But that's the idea, is that you learn from me so you can become an independent trader. I don't want you dependent on me. Now, I'd love if you stayed a lifelong member of our community, as many of our traders who have been quite successful have, because you give back to the community at that point when you're sharing your own ideas. And I see you've got, a 100K badge or a 250K badge or a 500K badge or $1 million badge. So I would love that. But I want you to be independent. So with the Warrior Pro course or the Warrior Pro membership, you'll have access to my 2 courses, Day Trading the Basics and Day Trading Strategies and Scaling. Now, this membership in the middle also gives you a month of access to my chat room, my broadcast, my scanners, my news, charting, and the simulator. This bundle that we put together for Black Friday includes a year of access. It's the Warrior Pro special bundle. It includes a year of access to my chat room and live broadcast. And it includes 90 days of access to my scanners, my charting, my news feed, and 90 days of access to the simulator with real-time level 2 data. And it includes a 7-day money-back guarantee. So I encourage you guys to take advantage of these Black Friday, Cyber Monday sales before they end, because these are our biggest sales of the year. These are the biggest discounts of the year that you will see here at Warrior Trading. So make sure you guys check these out. And as always, if you have questions, don't hesitate to reach out. You can email us, team@warriortrading.com. But of course, it's the weekend right now, so we won't get back to you as quickly as if you email during the week. But nonetheless, you feel free to reach out if you have very specific questions and you think we can help answer them, because we want to make sure that you know the community that you're joining and that you feel really good about it. So if you have any questions, don't hesitate to shoot an email, reach out, and I will see you guys back at it here on Monday morning. This also, by the way, is more or less my game plan for the week ahead. So game plan for the week ahead is to look for these types of stocks in real time. Well, the stocks that met these criteria, which I had just written here, and that either have Trump catalyst, biotech, or private placement catalyst. If we look at the stocks from Friday, UMAC was kind of tricky because, gosh darn it, this thing stopped me out. I went red on it, and then sure enough, it goes up to $20 a share. But the high degree of selling was a problem. It's positioned to continue into next week, which is infuriating because it might. And then I'll have to decide, do I want to trade it again on Monday, knowing how choppy it was on Friday? And I don't know what the answer to that question is going to be. It'll depend on what the price is. To be honest, I would prefer if something better comes along that doesn't have that high degree of hidden sellers, but I'll evaluate based on the price action on Monday. And who knows, maybe the hidden selling is gone if they've sold enough shares. The company did file a registration to sell more shares, and the stock had 60 million shares of volume on Friday, plus another 56 million the day before. So, at this point, well, let's look at the filing. So they only registered to sell 3.5 million shares. So at this point, they really could have very easily sold all of those shares on the market, given the volume that we've had. So it's possible that selling is done, but I could be wrong, and I don't know. And I also don't even know for sure if it's the company that's been selling these shares or if the stock is just, I don't know if something else is going on. But, someone else is shorting it or selling a ton of shares on it. I don't know for sure. But in any case, I'll have to see what the price action looks like on Monday. So we've got that one. And then for continuation, Xena, So this is a stock that's obviously been strong. First daily candle to make a new high happened on Friday. Not quite positioned yet for a move back to 12. AGFY, this one, unbelievable. It's crazy how high it's gone, but the volume is too light to safely trade. IDAI, too cheap. UMAC, already talked about it. PDYN, 16 million share float and kind of not clean. Not interested in that. So really the only stock on watch for continuation is UMAC, but Xena is a possibility going into Monday. But realistically, Monday morning, I'm going to be sitting down looking at this top gainer scanner and asking myself which of these stocks are obvious and which one, that not these ones right now, but which ones that are on that scan on Monday. And then I'll just be deciding which one I want to trade. And then we'll be watching for any breaking news that comes out between when I sit down and then the opening bell at 9:30. So that's the game plan. That's the recap for the month of November. And I hope you guys really enjoyed this episode. And again, if you haven't already checked out our Black Friday, Cyber Monday sales, I hope you check them out. And I hope to see you in the chat room, live streaming. I will be there Monday morning, at 6:45. So bright and early, 7 a.m. I'll see you guys in the chat room. All right. Thanks as always for tuning in. I'll remind you as always, trading is risky. My results aren't typical and there's no guarantee that you'll find success. Whether you trade with me or you learn on your own. So please manage your risk and practice in a simulator before you put real money on the line. All right. I'll see you guys on Monday.